What's up, guys? Today is Martin Luther King Day, so the stock market isn't open, but I want to talk about a very special company today that means a lot to me and to my daughter. So today is Monday, January 15th. The S&P is at 2,786 right now, and the Dow Jones is at 25,803 for reference later. So the company that I want to talk about today is a wonderful investment for beginning investors and experienced investors. And I think it is a particularly great company for children to own, like my daughter. So the company I want to talk about owns, which I'm sure you can guess what company it is by now by looking at some of the stuff on the board, but they own ESPN, they own Mickey Mouse, and a whole bunch of characters like that, like the Little Mermaid. They own the broadcasting company, American Broadcasting Company, ABC. They own the whole Star Wars franchise, Lucasfilm. They bought that for $4 billion. They own Marvel, they own the Avengers, they own Iron Man, they own Hulk, they own Spider-Man. They also own the Magic Kingdom. They own many theme parks like the Magic Kingdom, Epcot Center, stuff like that. They own the Pixar movies, which made movies like Toy Story and stuff like that. They also own Hulu, the popular streaming service that competes with companies like Netflix, like YouTube, like all kinds of streaming companies and video companies. So this company is Disney. Disney is a fantastic company that friends of mine have owned for years. My daughter, who's 2 years old, she's owned it for almost 2 years now. And I think it is a fantastic company for people to invest in for many, many reasons. The main reason is because they own such a diverse group of media companies. So I'm going to read from a financial website, just 2 sentences real quick, just to formally describe Disney. To those of you that don't know what it is, but unless you've been living under a rock, I'm sure you know what Disney is. So Disney is a financial conglomerate, media conglomerate. Let's see, formally, Walt Disney Company is a diversified international family entertainment and media enterprise. It operates through 4 business segments. 1, media networks. 2, parks and resorts. 3, studio entertainment and consumer products. And interactive media. So we all know what Disney does for the most part, but maybe there's some things that Disney owns that you didn't know of. Like, many people know that Disney owns the theme parks. Many people know that Disney now owns the rights to all the Marvel characters. But Star Wars franchise is becoming a major part of Disney's portfolio of investments. They have numerous movies that come out, and they're going to have numerous movies coming out for years to come. And these are billion-dollar movies. They're making loads of monies off these movies, and they're also making a lot of movies off of the products that they can sell, the toys that they can sell to kids. And right now, one of the huge sources of Disney's revenue is that they own ESPN. At one point, ESPN was bringing in about half of the revenue. Just a ballpark, half of the dollars coming into Disney came from ESPN, and that just talks about sports, and that's kind of a completely separate thing. They don't like advertise for Mickey Mouse when they have ESPN, when you're watching sports. So, but yeah, a lot of people don't even know that Disney owns ESPN, and that's like half of what Disney is. Now, they are starting to lose a little bit of revenue from ESPN because the general trend from the population is that we're starting to do some cord cutting, which means that we are starting to, as a nation, we're starting to watch less cable TV, and we're starting to watch more streaming companies like Netflix, like YouTube, like things like that. So not everyone, especially millennials and people even younger than that, not everyone has cable TV at their house. Sometimes they just get internet service, and then they just get Netflix, or they just get Stars, or some sort of cheap paid service. So I think that Disney has enough of a diverse variety of companies under their umbrella of ownership that it's actually a good investment for a lot of people, and it's especially good for kids because you can tell your kids that they own the company that makes the Iron Man movie, or they own the company that makes the Toy Story movie, or whatever the next big movie is. Kids love Frozen. That was one of the biggest movies ever. So just to get into some numbers real quick, Disney is approximately a $170 billion company, and their yearly sales, to ballpark it, is around $55 billion a year. And with that many sales, they earn about $9 billion a year, which is a lot of money. Disney is one of the bigger companies in the world. So if you were to buy a share of Disney today or last Friday or tomorrow, you will be paying about $112. In the last year or so, in the last 52 weeks, Disney was trading between $96 and $116. So $112 is what it's trading at approximately. That is about 19 times what Disney is earning. So that is lower than the overall stock market. This is a slightly cheaper company. And what that means is the overall market and investors in general might be a little bit worried that their revenue growth in general is going to be a little bit slow due to the ESPN concerns. But I think overall Disney is a survivor, and that's not something that you have to worry too much about. I think Disney is definitely one of those companies you can buy a share right now for about $112, and you will continuously get dividends for probably the rest of your life. I can't say that for sure, but I can guess that you'll get dividends for the rest of your life. Currently, they are paying $1.68 in dividends, so that works out to about 1.5%. And what that means is if you bought about $1,000 worth of Disney, you would get about $15 in dividends every single year. Now, Disney is a company that is growing its different businesses and franchises, and I think that Disney will raise their dividends in the future, and they have raised their dividends in the past, so there's no reason to think that they won't raise their dividends in the future. So I think in the future you'll get more than $15 a year if you were to invest $1,000. I also think that this is a fantastic, fantastic company to buy for your children because it's very, very easy to explain what this company does. And it's a way to create interest in investing. It's a way for your kids to actually start making money on their own by owning shares of a great American company and then just collecting money for the rest of their lives. They never have to sell the shares. They can just keep collecting dividends for the rest of their lives and kind of have that Warren Buffett mentality where the best holding period for any stock is a lifetime. So thanks for watching. If you made it through this whole video, please share this with someone that might be interested in this video, someone that might be interested in starting to invest in the stock market, or someone that might have kids and they want to start buying shares of great companies for their children. Again, thanks for watching and sharing. Bye.